As an immigrant, we always want to achieve financial freedom, and that is because we work hard and we also want to make sure that our money works for us. But how do we go about this, especially if we are new and not so knowledgeable about investing? Well, the good news is it doesn't take a lot of information, a lot of knowledge, and you don't have to go to school for 10 years to get to understand how investing works. So in this video, I'll be sharing with you some details and some crucial information that will help you get started if you're new to investing. What I have in front of me right now is a CPI inflation calculator. This will help you to estimate how much your money is worth at the current time right now. So a good example is, let's say you have $10,000 in your bank account in 2020. Now, how much do you think you would have by June 2023? The buying power of your $10,000 would have diminished. In this case, you would need to have $11,789 to be able to buy the same thing. So this begs the question, why should you consider investing? Well, back to the example I gave you. If you had $10,000 saved in a bank account, then your $10,000 is probably just working to gain about 0.01% interest. And I used working because if you understand how banks work, they take your money, they lend it out to other people at 10, 15, 20% interest, and they reap all the rewards and pay you pennies. In this case, your $10,000 making 0.01% is nothing at the end of the year, say 1 year. Whereas if you invested your $10,000 into a stock market at 7%, at the end of that period, you will be making a lot more than what you would have made on 0.01%. The other benefit to investing is compound interest. They say the seventh wonder of the world, I believe that's how it's said, is the compound interest. And I think it's the simplest way to explain it is this, right? When you invest your money, the interest your money bears multiplies over time. And that could become exponential over the course of years. And that leads to my next point. You always want to make sure you have time for your money to work, because without sufficient time, your money may actually lose value. And there are no guarantees, especially in the short period of time. But over the long period of time, you generally can reap the rewards of investing. In this example, I wanted to show you what happens when you save just $500 over the course of, say, 10 years. $500 saved every month will yield $60,000 in your bank account. Well, that's a lot of money, but let's see what compound interest does to it. And mind you, something to keep in mind is this $60,000, as we haven't accounted for inflation, because if you account for inflation at 2% average over the course of years, your buying power of something worth $60,000 at that time will be a lot more. In this case, maybe close to $64,000 or $65,000. In any case, let's assume that we get a 7% return on average, which is generally what the stock market will return over the course of 10 years. Is saving $500 every month. Your total ending balance will be $85,527. And your interest will be around $25,525. Now, that sounds a lot better than just $60,000. The next question is, as an immigrant, can you open an investment account? The short answer to that is yes. However, you would need to either have a social security number or an I-10. The I-10 stands for Individual Taxpayer Identification Number, and this number is generally gotten through the IRS. With this number, you can use it to open an account. Below is a link to the IRS page to apply for this number. This number generally would expire every 3 years, so you generally have to renew it based on your situation. But it is possible. And of course, you need to have some proof of identification and a proof of address. So those are important things that you need, and which means you have to be in the US. This leads to the next question. What type of account do you want to open? It depends on you, because there's so many accounts out there, but generally we can classify them into a typical brokerage account. We have a retirement account. We have a custodial account, maybe for kids, or an education account for kids as well, maybe for you. Now, depending on what your goal is and what your long-term plans are, you would choose an account to suit your need. For example, if you're planning to just have an investment account that you can put money into, where you can sometimes be able to take out the money and not really incur any penalty, you would have to pay taxes on your gain, then you can think about a brokerage account. On the other hand, if you're worried about taxes and you want to save or defer your taxes to later in the future, or you want to even avoid it completely, then you can think about a retirement account, such as a traditional IRA or a Roth IRA. Now, the next one is the custodial account, or maybe an education account, or 529, like and the likes. These type of accounts are generally for either for your kids or even for you. But the point here is, if those expenses are used towards an education expense, or they are given to the child and you're not taking them out, you would either defer taxes or will not pay taxes at all. Now, let's assume that you already opened an account, such as a brokerage account. Well, you can open through like M1 Finance, Robinhood, Vanguard, Fidelity. There's so many of them. By opening this account, you will be able to transfer money from your main bank account into this account and then put that money to use by investing it. You can invest in stocks, bonds, real estate, or REIT. And also, you can also invest in cryptocurrencies, depending on what your risk tolerance is, which leads to my next question. How comfortable or how risky of an investor are you? If you consider cryptocurrencies as one of your assets, you need to understand that the risk in the account becomes higher because of the volatility that you tend to experience with cryptocurrencies. Same thing with stocks as well. They can be as volatile, but they're generally much more steady, especially if you can choose good stocks to invest in. The other point to mention is you can always consider investing in index funds, mutual funds, ETFs, which because all of these are diversified and your money is spread amongst different companies. Now, this leads to my next point of diversification. If you think about it, when you're investing, you don't want all your eggs in one basket because, well, if the basket drops, the eggs crack and that means you lose all your investments. So the key thing to remember is when you're investing, try to diversify your investments, such as having a bit of real estate investment, having a bit of stocks and bonds investments as well, maybe some index funds, maybe some individual stocks, and maybe some cryptocurrencies. You can always divide these assets in based on your goal, based on your risk tolerance, and based on what you plan to do with that account. But the point is, do not invest all your money into one company and expect that company to make it through the years, because over time companies can lose value and sometimes they can even go bankrupt. Knowing that we do not control how these companies will perform over the course of the years, one thing that we can always harness is to dollar cost average into these investments. So for example, one of the things I always recommend, which I mentioned in my last video, if you haven't seen it, I'll actually link it up above, is to invest on a particular day every week or a particular time every month. And you make it automatic so that this money is deducted from your account and is invested into whatever investment you have. The benefit of that is you don't have to think about it and you're not emotionally controlled by the stock market or by the real estate market. The point here is it automatically does it for you and you don't have to worry about it. This will do two things for you. You end up buying whether it's high or low, it doesn't matter. Over the course of time, as the value of the investments grow, the values of the company also grow, your investments will go higher. While we are talking about value growing over time, you would also get two things: dividends and capital appreciation, or in this case, the stock appreciation of those companies if they continue to perform well. I hope that you have gained some value out of this video. If you have, please don't forget to drop a like on it. Don't forget to subscribe. And of course, leave your comments in the comment section below. I will respond to them when I can.